Hey guys, what's going on? Today we're looking at Plug Power, ticker Plug. This one had a wild after-hours session. Stock jumped about 8 to 9% on their Q2 earnings beat. But before we get into it, this is educational content only, not investment advice. I'm not your financial advisor. Do your own research. So Plug Power is a hydrogen fuel cell company based out of Latham, New York. They build comprehensive hydrogen solutions, electrolyzers, fuel cells, hydrogen liquefaction, the whole stack. They're not just making fuel cells, they're trying to build the entire hydrogen economy ecosystem. Material handling, on-road vehicles, stationary power, that's their bread and butter. And lately there's been some buzz about hydrogen fuel cells potentially playing a role in data center backup power and even primary power, which is a space to watch. Here's what happened with earnings. Q2 2026 revenue came in at $178.3 million. That beat estimates and was up about 2.5% year over year. But the bigger story is they raised their full-year revenue growth outlook to 15 to 16%. That's a raise, and the market loved it. Adjusted EPS was -7 cents, which beat the consensus estimate of -8 cents. Not profitable yet, but narrower losses than expected. They also reported significant gross margin improvement, which is important for a company that's been burning cash for years. Now let's talk about the stock. Current price around $2.30 after hours, up 8 to 9% on the beat. Market cap is about $2.94 billion. 52-week range is 1.41 to 4.58. Here's the thing though, this stock got hammered in July. It slumped about 24% before earnings. So this after-hours pop is partly just the stock recovering from a brutal month. It's still way below its 52-week high. Plug has been a rough ride for shareholders, and I want to be honest about that. Now let's look at what analysts think. And I'll be straight with you guys, this is a controversial stock. Over the last 3 months, we're looking at 10 buy ratings, 10 hold ratings, and 4 sell ratings. That's about as split as it gets. The average analyst price target sits around $3.31 to $3.48 depending on the source. The buy-rated analyst average target is closer to $3.50 to $3.65. On the high end, you've got Craig-Hallum with a street high around $4 or more. On the low end, some targets are down around $1.50. There's even a consensus from one source showing an average target as low as $1.80, suggesting downside of about 17%. So you've got bulls seeing 50% upside and bears seeing 20% downside. That's a divided Wall Street. Let me lay out the bull case. Plug is improving margins. They raised guidance. The hydrogen economy is getting tailwinds from data center demand. Tech companies are looking at hydrogen as a clean backup and primary power solution. If Plug can execute on their roadmap and start narrowing losses toward break-even, there's a real turnaround story here. The stock at 2.30 is trading well below the average analyst target, and if the momentum from this earnings beat holds, you could see a move toward that 3.50 area. But here's the bear case, and it's important. Plug Power has a long history of burning cash and diluting shareholders. They've done multiple capital raises. The company is still not profitable. Revenue growth of 15 to 16% is decent but not explosive for a company at this stage. And 4 analysts have sell ratings on this thing. The hydrogen economy has been the future for a long time now, and adoption has been slower than a lot of people hoped. If they can't execute on margin improvement, this stock could easily revisit the lows. I'm from Columbus, Ohio, and I've watched a lot of these clean energy names come and go. Some make it, some don't. So here's my bottom line on Plug Power. The earnings beat and raise is a real positive. Margin improvement is the most encouraging sign. But this is a turnaround story with mixed analyst sentiment and real risks. If you're interested, I'd be watching for sustained margin improvement and whether they can hit that 15 to 16% growth guidance. The analyst community is split down the middle, and I think that tells you everything you need to know about the risk-reward here. Thanks for watching guys, and I'll catch you in the next one.